Bulls just might be on autopilot here across risk assets going into the end of the year. This was the week that could have presented the kind of final hurdle for 2024, which is locking in that Fed cut for December, which seems the market wants. If we had a warm ISM services today after yesterday's good JOLTS print in job openings, that would have set us up for Friday, an employment report that could have taken the odds of that cut down. But instead what we got was soft services, a weak private payrolls as well, and a setup that looks like the market is ready to kind of let go of the dollar strength, let go of the bond weakness, and have a more Goldilocks style backdrop that allows the Fed to cut. So the light for the dollar goes yellow to join bonds, even though the dollar still looks quite a bit resilient, and it's hard to imagine a deep bear case here for the dollar. Despite everything you hear about how much the next administration wants to weaken the dollar and all that stuff, that logic is so busted. I'm just telling you, just right now, go with the chart. Yellow doesn't mean downside. What it means is that the upside for the dollar is probably limited because it looks like the upside for yields are limited based on how we traded here in the last 24 hours. The context was coming into this. We had a pretty good little opportunity for bond bears to push yields higher, and they fell flat on their face today. Yesterday's reversal in the JOLTS was important because it presented that opportunity for yields to start rising, and they tried to going into this morning's number. Overnight, we had bonds selling. Yields were up overnight, the blue line, and then they came down and had followed through throughout the session. Now, in the latter part of the day, once again, you kind of saw that dollar resilience where the greenback just has trouble going down too far. The rest of the world is a mess, let's be frank. France's parliament gets toppled, and it's just a disaster. U.S. is where it's at. It's safe, it's reliable, the economic situation is good. But is it going to get to the point where the Fed is trapped and either has to hike or can't cut? It's not looking like that. The last print on Friday for employment could move the needle a little bit, but it looks like you're kind of getting the coast clearing out for bulls to just run here. The seasonality obviously helps. The strength in tech is huge. Because even if this bond stuff goes the other way, let's say employment's really hot or wages are really hot, the markets come back into the big tech trade, which has actually proven itself to be more resilient to rates. The Russell, the rotation, that stuff matters more for the rate conversation. But the strength here so far in December, it's only a couple days, but they have been big days here. The strength in the Mag 7 is huge. The strength in the S&P is massive, almost up to 6,100. We went right through 60.50. Apple's making highs. I mean, this is really big stuff. And to me, that's the more favorable math. Rotation is fun. Breadth is nice if it happens. But mathematically, it's easiest to get the market to move upwards when big tech is leading. And that's what we've got right now. I think that's overall a positive sign. Also, you throw in the Bitcoin move too. It might be related to Trump's SEC choice, but it also probably just tells us that risk appetite is starting to warm back up and melt higher again. The Bitcoin chart trying to get through back to 100K plus while gold has been weak. That's important. This is the 1 month chart. Bitcoin's ramping up, gold is not. Why? Because they're two wildly different things. Bitcoin when you want to take extra risk. Gold if you're not sure what's going on. Gold had a really great run because it wasn't obvious what was going on throughout a lot of this year. But what's turned out is that the economy's been better than expected. The situation is solid. The outlook has a lot of possible upside. And so risk takes over from safety. And Bitcoin's move today also fits in with the stock market run that suggests bulls might be able to just cruise into the end of the year.